Okay, Assalamu alaikum and good evening, students. This is Mustafa Mirchawala, your F6 trainer. The objective of today's class, this is basically a revision day for December 2022 attempt, right? The objective of today's class is not just solving the questions, but the real objective is to give you confidence, because there are many negativities. In the ending days, I have seen there are many negativities. People's trying to, your friends, sometimes your friends or your colleagues, they start to confuse you. They say that's a very difficult paper. How will you manage a lot of stuff? Because yes, that's correct, that in this paper you have many things to learn. Yes, there are a lot of things. There are small rules, but still the good news is that the pass rate of this paper is excellent. You have seen, I think in the last attempt it was 52 or 51% something. So 50% or 51%, so it is considered to be one of the best pass rate in ACCA's applied skills module. So try to concentrate on positive things, and those students who took classes, wait, oh, what happened? Just wait a minute. Oh. All of you, please turn off your cameras, okay? Because I have changed the setting. I want to teach on big screen. The recording will be better in this screen, okay? So please don't turn on your cameras. All of you, please turn off your cameras. Otherwise, I'll have to change the settings. And in that setting, this screen will be smaller for recording purpose. Now, so just for your motivation, sharing some of the scores of last attempt, very recent attempt. See, it's September 2022 attempt. I'm not talking about like 2 years, 3 years back. It's very latest attempt. So when these guys can score in 90s, 80s, so you can also score in 50. Because as per my wish, I always say to my student that for me everything is 50 marks. 50 is equal to 100 and 49 is equal to 0. That's the simple science, okay? If you go to job industry or anywhere, you will just see pass or fail. They want your skills, plus they want your papers to be cleared. That's very simple, okay? Now, in past, I have also given many tips regarding F6. I would like to once again highlight that always maintain exam folder. Or if you haven't maintained exam folder till now, although it is instructed in my lectures to maintain exam folder, after each and every class, after each and every chapter, make the notes, make your summary notes. But those who haven't made those summary notes, please keep a page for mistakes. Write the heading mistakes, and during the exam kit solving, whatever mistakes comes in front of you, write it down, okay? So that you don't repeat. In the end, when you revise your mistakes folders, you will come to know what are the basic mistakes. So in this way, you can improve your score. This is the technique, okay? And in this technique is also called highlighting. Whatever the issue, highlight it, okay? Right? So apply it. And one more thing I would like to say, to read the examiner latest 2 examiner report is must for you. Also solve the mock exam as well, because there are students, they do past papers, but they do one question at a time. First they solve one question, then they take half an hour break, then they solve question number 2, then they take break. In the exam, you have to solve complete exam in just 3 hours or so, in a limited number of time. So try to solve 2-3 mock papers, okay? And one more thing, if you want to use the past papers of accaglobal.com, only the recent attempt is relevant, that is 21-22 fiscal year. Okay, you are giving 21-22 fiscal year, so only the recent attempt is relevant. All other old past papers, all other old past papers are totally irrelevant. Old past papers are irrelevant and outdated, and those past papers you can solve from your exam kit. Those past papers you can solve from your exam kit, okay? So the best tool is your exam kit, right? So focus on it. And the thing which I told you, that maintain a mistakes folder. Also, for last 3-4 days, what I did when I was the student of taxation, what I did, and I applied this, and I found it very beneficial. In last 3 to 4 days, try to solve exam kit orally. Now, no need to do any written practice. Okay, because now you should see the question, you should think the answer, and then you should see the solution. Then question, think the answer, solution. In this way, you can just go through almost complete exam kit. Complete thorough revision will be done in last 3 days. Apply this thing. Okay, one more thing. In last attempt, or I think 6 months back, ACCA told us that globally, the reason of failure of students in applied skills module, like from F5 to F9, PM to FM, is section C. Because of section C, students fail. So please try to practice questions for section C on the examination software that is on ACCAglobal.com, and give much time to section C as well. Okay, be careful. Now, as I have already recorded the recent attempt past paper. The latest past paper available on the internet is March-June 2022, and it has already been recorded by me. I have already recorded it, and it is available in my LMS and as well as on YouTube. Both it's available. Okay, so today we'll do something different. We'll be doing MCQs. And through MCQs we can have a good revision. Okay, so let's start. Don't waste the time. Time is very precious. But one thing you must know, that as this is a revision day, so you must have a basic knowledge of taxation. Okay, one thing I forgot to tell you, that our admin is sending you a WhatsApp group link. Kindly join that WhatsApp group so that we can communicate. We can give you more revision days, more videos. We can send you more stuff related to taxation. Okay, so it's better you join that WhatsApp group. I recommend all of you to join the WhatsApp group. Okay, the link is inside the chat box. Okay, so this question number 1 is related to self-assessment individuals. You all remember that there are two things. One is the payment of tax. And the other thing is filing of return. Tax return is like a document. Okay, so for individuals, the due date for filing tax return for fiscal year 21-22 is 31st of January 23. And how to learn this date? Very simple. Our fiscal year is 21-22. So 21-22 fiscal year ends on 5th April 22. And whatever 31st January comes after 5th of January 2022, that's the due date for filing tax return. So this is the due date for filing tax return. Now, if you don't file return on time, what are the penalties? 0 to 3 months, it's £100 fixed initial penalty, and 3 to 6 months. If you delayed, then yes, £100 you have to pay plus £10 per day multiplied by 90 days. Obviously, between 3 to 6 months, there are 3 months. Between 3 to 6 months, there are 3 months. So 3 months means 90 days, round about 90 days. So 90 days multiplied by 10, it's £900. Okay. And after 6 months, you have to pay a tax geared penalty, which is higher of £300 or 5% of tax liability. £300 or 5% of tax liability. Okay. You must remember all these things. This thing will not be given in the exam. These penalties, rates won't be given in the exam. So you must learn it. Okay. Now look at the screen. On 10th of August 2023, Zahra submitted her income tax return electronically for the tax year 21-22. Now hold. For 21-22, what is the due date? For 21-22, what is the due date? 31st January 23. 31st January 2023 was the due date, but he submitted the tax return on 10th of August. So after January, count the months, please. Feb, March, April, May, June, July, and then August. Okay. So it's like 6 months, 10 days. It's like 6 months, 10 days late. 6 months, 10 days late. 6 months and 10 days late. Open your eyes now. So you will have to bear this penalty. You have to bear this both, because 0 to 3 months, £100. This is to be applied on you. Then £900 as well. So 100 plus 900 is 1,000. And now higher of these two, £300 of 5% of tax liability. What is your tax liability? My respected student, tell me, what is your tax liability? Your tax liability is £8,400. Your tax liability is £8,400. So 8,400 times 5%. 8,400 times 5% is, I think, 420. Now you tell me, out of this 420 or 300, out of this 420 or 300, which number is higher? Out of this 420 or 300, which number is higher? It's 420 is higher. Okay. So you need to pay 3 penalties. Listen, this £100 plus this £900 plus 420. So what will be the total? What will be £100 plus £900 plus 1420? My respected students, is the final answer. So the answer is C. See the requirement. This is only for late filing of income tax return. I repeat, keep this thing in mind. This is the basic mistake students do. Even this is written in the examiner report section as well. Paying tax is a separate thing. Filing return is a separate thing. Paying tax is a separate thing. Filing return is a separate thing. Return is a document. Tax return is a document. Okay. So penalties for tax is different. Penalties for late filing of tax return is different. So right now in this question, you are only asked to calculate the penalties for late filing of tax return, not paying of tax. Okay. See, they have clearly written here. Okay. So this was for, I would say, if somebody has taken the proper classes, this was ordinary MCQ. Now next. Okay. Abida sees, Abida individual. Think over it. Abida ceased trading on 31st January 2022. Her recent trading profits were as follows. Now, hope you remember one topic, basis period. Hope you remember one topic, basis period. And when I teach in my class, I teach in such a way, I give you some identification when to apply basis period. Students, look at here. There is no basis period calculation in corporation tax. For companies, there is no basis period calculation. Remember, only for individuals, yes, you have to do basis period calculation. And what are the identification? That the person must be individual. The question should be of trading income. There is no basis period calculation for employment income. There is no basis period calculation for property income. Okay. Why? Because employment income and property income's P&L we already make for fiscal year. But for trading income, we prepare accounts for accounting period. We prepare accounts for accounting period in trading income. Okay. But individual pays tax for fiscal year. 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 Individual pays tax for fiscal year, right, students? So now you need to apply basis period calculation. So what are the indications? The person must be individual. Question is of trading income. You can see that the business has just started or the business has just ended Yes, in this question the business has just ceased. Okay, now wait. Whenever a business ceases, there are two special cases. The first case is if last and second last accounting periods ends in different fiscal year. If last and second last accounting period ends in different fiscal year. And the second case was if last and second last accounting period ends in same fiscal year. So let's check. Which one is this? See, this is on this date, the business is closed. 31st January 2022, the business is closed. Can anybody tell me 31st January 2022 lies in which fiscal year? 31st of January 2022 lies in which fiscal year? Yes, it's 21-22. Very good. It's 21-22. And now this is second last fiscal year. 30th June 21. This is second last accounting period. This second last accounting period also lies in 21-22. This date also lies in 21-22 fiscal year. So what is the case here? The case here is last and second last accounting period ends in same fiscal year. Last and second last accounting period ends in same fiscal year. So in that case, what is the treatment? You have to merge them. Remember, you have studied if last and second last accounting period ends in same fiscal year, then you need to merge them. So how you do it? Wait, you will write here 21-22. Look at here. What are the date? See, the third last accounting period ends on 30th June 2020. The third last accounting period ends on 30th June 2020. What is the next date? What is the next day after 30th June 2020? This will be 1st July. July is 7, 2020. And now merge it till here. 31-1-22. See, we have merged it. So now these two, wait. We'll combine these two. 11,200 plus 7,300. 11,200 plus 3,300, 7,300 minus. You remember one thing, whenever you close the business, now this is the last time you are meeting tax department. Whenever you cease the business or close the business, just think this is the last time you are meeting tax department. So now, yes, you have to deduct overlapping profit. That means you need to claim back the overlapping profit. So what is the overlapping profit in this question? It's 2,600. Can anybody tell me what is the answer? 11,200 plus 7,300 minus 2,600. This will be 15,900. Thank you. This will be 15,900. 900. So for, see the requirement. What amount of trading profit will Abida be assessed for the tax year 21-22? See, they have asked me for 21. Oh, it's 16,900. Somebody thinks, what is the correct amount? 15 or 16? 15 or 16? Okay, 15,900. Okay. So listen, as they are just asking about 21-22 fiscal year, so you just need to give answer of 21-22. Now student, listen very carefully. For first 60 marks, there is no presentation. For first 60 marks, there is no presentation. You just need to give answer, right? So in MCQs or OTKs, don't do any extra working. Don't do any formalities or any extra working. Just to the point answer. To the point answer. So this question related to basis period, closing year rules, and which case they gave, which case they tested. The name of the case was if last and second last. If last and second last accounting periods ends in same fiscal year, you have to merge them. You have to merge them. Have a look, please. Now, the next question is related to, very easy question. It is related to value added tax. It is related to value added tax. Okay. You know, for value added tax, historic test, the limit is 85,000. For historic test, the limit is 85,000. Okay. Now they have started the businesses in January 21. See, January, Feb, March, April, May, June, July, August, September, October, November, and December. Just see. Now, for the first quarter, what is the sales? For this 3 months, the sale is 15,000. Okay, 15K. For the next 3 months, the sale is 20K. Now wait, 15 plus 20, the total is 35. 15 plus 20, the total is 35. The total is 35K. Okay. Now, still it is less than 85,000. Still it is less than 85,000. Remember this number. Remember this number, 85,000, 85K. Now for the next 3 months, the number is, the sale is 30K. So now wait, 15 plus 20, 15 plus 20, 15 plus 20 is, 15 plus 20 is 35, 35 plus 30 is, 35 plus 30 is 65. Still we have not crossed the limit. Still in these 9 months, we have not crossed the limit. Now let's see. Now for this quarter, see, for this quarter, my dear student, for this quarter, the amount is 33,000 for 3 months. See, quarter means 3 months. Quarter means 3 months. Straight away, quarter means how many months? 3 months. So 33,000 divided by 3 per month is 11K. So that means 11, 11, and 11. Now use your brain. Till here, till September, total is 65. Now you add October. 65 plus 11. 65 plus 11 is 76. 76. Still it is less than. Still it is less than 85. So now when you add the November month, so 76 plus 11 will give you 87. Yes, 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 yes. By the end of November, open your eyes, open your ears. By the end of November, trader just realized that the last 11 months, in this question only 11 months are there. In the last 11 months, total taxable supplies exceeded 85,000. Exceeded 85,000 in the month of November, at the end of November. So now you have 1 month time. You have 1 month time to apply. And tax department will make you register, from the very next day after that month. So you have 1 month time, that is December month. So tax department will make you register from 1st January 2022. I repeat, at the end of November, you realize that you cross 85,000. So now you have 1 month time. You have 1 month time to apply. You have 1 month time to apply. So 1 month means December month. So you have December months, and tax department will make you register just from the very next day of that month. So that is 1st of January 2022. So my dear student, the answer is B. The answer is B. The answer is B. Yes, I'll provide you the recording as well. I'll provide you the recording. Those who want recording, I'll provide you. Don't worry, but be relaxed. Why not 30? Somebody's asking why not 30th? No, from the very next day of that month. From the next day of that month. This is written in the law. Obviously, tax is connected to law. Now, next question is related to IHT. Next question is related to IHT. Please, student, look at here. If they are saying Ken died on 15 January 2022. The death day is very important. The death day is always very, very important. Wait, 31st, sorry, 15th. This is the day of death. Okay. So now, wait a minute. Hello. Now listen. So the date of death is 15th of January 2022. 15th of January 2022. Okay. Now, leaving a chargeable estate. Chargeable estate means death state. So the value of death state is how much? 245,000. 245K. The value of death state is 245K. Now, he made gross, see the word, very important, gross chargeable transfer, gross chargeable lifetime transfer, CLT. Gross chargeable lifetime transfer is CLT. And when they have used the word gross, so it includes everything. It includes everything, as well as the annual exemption has already been deducted. When they have used the word gross chargeable transfer, that means it includes everything. And that also means annual exemption has already been deducted. This is what we studied in the class as well. Okay. So the first CLT he did in October 14. He did in October 14. Wait, October 14. And this October 14, the amount of CLT was 98,000. Amount of CLT was 98,000. Now wait. And the second CLT was in June 2018. The second CLT was in June 2018. And this was 118,000. 118,000. Now wait. Now, what is the requirement? Again, this is not a descriptive question. This is just MCQ. This is just MCQ, please. So no need to waste your energy or time. How much inheritance tax, how much IHT is payable in respect of chargeable state of 245,000? That means you need to calculate tax on IHT on death state. IHT on death state, you need to calculate IHT on death state. Now wait. Let me tell you how to do it. Let me show you how to do it. IHT on state. IHT on state. Always write the date as the state relates to the date of death. State is an asset which you have calculated on the date of death, and this relates to the date of death. So write the date of death, which is 15th January 22. Okay. Now, what is the value of state? What is the value of state? It's 245,000. The value of state is 245,000. Now, normally, every individual is entitled to an NRB of 325,000, normal standard. Okay. So you will write NRB 325,000. Now, you hope you remember, you have NRB relates to 7 years. NRB relates to last 7 years, and we call it 7-year accumulation principle. We call it 7-year accumulation principle. Now wait, you have to apply date as well. This is 15 January 2022. 15th of January 22 is the date of death. Now apply a mark on 7 years back. So 7 years back, it will be January 2015. Okay, so see this. This is all last 7 years. This is all last 7 years. Okay, so now for death state calculation, you are standing here. For death state calculation, you are standing here on 15 January 2022. For the death state calculation, you are standing on 15 January 2022. Now see 7 years back. See 7 years back, there is only one CLT. In last 7 years, there is only one CLT that will consume your NRB. That will consume your NRB. This CLT is all 7 years back. This is 7 years back. Okay, so you will only reduce less reduction of how much? 118,000. This CLT is only consume your NRB. So how much? 325 less 118 is how much? 325 less 118 is how much? 325 less 118. Can anybody tell me? 207K. Thank you. 207,000 NRB we have, and we'll use it. So how much is the excess? Excess is 38,000. Excess is 38,000. And you know, on the death state, there is a flat tax rate of 40%. On the death state, there is a flat tax rate of 40%, which makes 15,200. Thank you. So your answer is 15,200 for question number 4. For question number 4, answer is 15,200. Okay, now giving you 30 seconds just to go through it. In the IHT world, this is an ordinary question. In the IHT world, this is going to be an ordinary question. And you know one thing, I have not picked these questions from your Kaplan exam kit, because Kaplan exam kit you normally do with the course. With the course you practice it. So these are new questions. Okay, now question number 5. Question number 5 is little bit non-routine thing, non-routine and theoretical type thing. And that is related to, first of all, it is related to companies. It is related to companies. Okay. Now, in corporation tax, first of all, there is one terminology. I hope you remember financial year. I hope you remember the terminology financial year. Financial year. There is one thing which is called fiscal year. There is one thing which is called fiscal year. Let me recall you. Fiscal year is a time period for which individual pays tax. Listen my words. Individual pays tax for fiscal year, but company pays tax for accounting period. Keep this in mind. Individual pays tax for fiscal year, but company pays tax for accounting period. Individual pays tax for fiscal year and company pays tax for accounting period. Okay, 2 dialogues. The third dialogue. For individuals, the new rules and regulations of tax comes according to fiscal year, But for companies, new rules and regulations comes according to financial year, Okay. And you know, financial year is fixed. Financial year starts on 1st April. Financial year starts on 1st April and ends on 31st March. Financial year starts on 1st April and ends on 31st March. And if you want to call any financial year, if you want to communicate any financial year, you always write with the year from which it is starting. You always recall it with the name of the year from which it is starting. For example, this is 1st April 20 to 31st March 21. This is 1st April 20 to 31st of March 21. So we call it, as it is starting in 20, so we call it FY20. We call it FY20, financial year 2020. Okay. And what if this is 1st April 21 to 31st March 22? So we call it FY21. We call it FY21. We call it FY21. Okay. Now, this question is related to accounting period. I just told you accounting period is the period for which companies pays tax. Accounting period is the period for which company pays tax. Company pays tax. Okay. And when accounting period starts, if you have read the book, I can also share the cutting with you if you want. Accounting period starts when you begin the trade. When you begin the trade, first thing, or when you become chargeable according to corporation tax. I repeat, when you begin your trade, the first date, or when you become chargeable. Chargeable means you have started earning. Although you have not started the trade, but still you have started the earning. That means this is the sign of beginning of accounting period. I repeat third time. Accounting period starts when you starts to trade, when a company starts to trade, or when a company is liable to corporation tax. And when the company is liable to corporation tax, when the company starts earning. So yes, sometime it happens that you have not started the business, but still you are earning. Why? Because you have kept the funds. You have kept the funds in the bank account, in the fixed deposit account, and through fixed deposit account, you are earning interest income. Through fixed deposit account, you are earning interest income. You are earning interest income. Okay. And interest income is for companies, interest income is chargeable for corporation tax. Okay. Now please use your brain. Read it very carefully. This is technical. Gear Limited opened and placed deposit into interest bearing bank account on 1st March 21. See this. They have started putting the funds on 1st March 21. So once you have put your funds in the bank, you start earning interest income. You start earning interest income. And when you have just started earning interest income, yes, you are liable for tax. So from this date, you are liable for tax. So yes, this is an indication of starting of accounting period. This is the indication of beginning of accounting period. Although you have not started the trade, but see, you are liable for tax because you have started earnings. You have started earnings, interest income. Now read the next line. The company began trading on 1st March 21. So out of these two dates, this is the earliest date. So your first accounting period starts on first of all, starting date starts on 1st March 21. Now the next question. Once the accounting period starts, when this accounting period will end? The first thing is after 12 months. If nothing is written, then after 12 months. If nothing is written, then after 12 months, okay? If it is a normal question, no more complication, then after 12 months. But if you have, listen my words, if you have one more point, if you have started to trade or you cease the trade, if you started to trade or you cease the trade, if you have started the trade or you cease the trade, then this starting of trade or cease the trade will become the ending of your accounting period. So yes, in this question, you started the trading on 1st April 21. So 1st April 21 means technically 31st March 21. So this is your first accounting period in this question. 31st March 21, 1st April 21 to 31st March 21. This is your first accounting period. And now you tell me what is the next date. Next day is 1st April 2021, and then take 12 months, 31st March 2022, because nothing is written about the business closure. So this is your first accounting period. This is your first accounting period, and this is your second accounting period. This is your second accounting period. I repeat once again, this is technical, I know. Listen to me. First of all, first time, what is the starting of first accounting period? When you are liable for tax, when you are liable or you have started the trade. You liable for tax or you started the trade. So you started the trade on 1st April 21, but you have started earning on 1st March 21. That means you are liable for tax on 1st March 21. So your first accounting period starts on 1st March 21. This is the date. And once the accounting period has started, now the next issue is when it is going to be end. Next issue is when is it going to be end. So now it ends on 12 months, the first limit. The second thing is when your trade ceases or your trade begins. So there is nothing is written about trade ceases, but yes, it is written about trade begin, and trade begins on 1st March 21, and 1st March 21 is technically 31st March 21, almost same date. So this is your first accounting period. This is your first accounting period. Now read the requirement. Read the requirement, students. Identify by clicking on the relevant boxes in the table below. GAIR Limited, for only they are asking about first accounting period for the corporation tax purpose, and the financial year in which first accounting period falls. Financial year in which first accounting period falls. Okay, so this is your first accounting period. See, this is your first accounting period, first answer. And now you tell me this first accounting period falls in which financial year? It falls in this financial year, FY 2020. See this, because FY 2020 is 1st April 2020 to 31st March 21. So technically it falls in FY 2020. Technically it falls in FY 2020. Hope you remember these dates. And I, with due respect, I would like to say that you must be very, very active for dates. Like there is a topic which we call basis period calculation. Whenever I teach, even I have posted my basis period video on, which is an Urdu Hindi language. It is available on YouTube as well. So if somebody wants to watch on YouTube, they can watch on YouTube as well. So I clearly says for basis period, you must know the fiscal year. You must know which date is lying in which fiscal year. So you must remember the calendar. You must remember the fiscal year. These are the basic things. These are the basic things. Okay. Okay. Majority has given the answer. Now, the next MCQ is free marks. I would say these are free marks. You know, whenever you in trading income, whenever you take a car on lease, you just need to check the CO2 of that car. You just need to check the CO2 emission of that car. If that car is creating pollution, that means if the CO2 emission rate of that car is greater than 50 grams, if the CO2 emission rate of that car is greater than 50 grams, then you will be punished. You will be punished. What is the punishment? 15% of the lease rental will not be allowed. 15% of lease rental will not be allowed. And what does it mean? 15% of lease rental not allowed means 15% of the lease rental will be added back. 15% of the lease rental will be added back. Okay. Now read the question. See, this is all again maths. For example, this is your profit, accounting profit. I don't know the number and they have not given. X Limited has included deduction in its accounting profit of 3,200. See, already this lease rental has already been deducted now, and the CO2 is 85. 85 means you breach the law. It's greater than 50. Okay. So now how much punishment is there? 15% of the lease rental not allowed. 15% of the lease rental not allowed. That means 15% will be added back. 15% will be added. So you will add back 15% of 3,200. What is the amount? I think it's 480. Yes, you need to add back 480. Answer is B. Answer is B. Answer is B. B is the answer. See, I have ticked as well. Now, next question relates again to IHT, inheritance tax. Okay. Now let's start. During the lifetime, Gabe has made the following potentially PATs. Yes, after all available exemptions. So that means annual exemptions already deducted. Annual exemption already deducted. Annual exemption already deducted. Right? So don't worry about the annual exemption. And now see, they have written what is PAT when you give directly, when one person gives to another person. So this is PAT. And when one person gives to trust, then this is CLT. Remember? So in this question, all gifts are PAT. They are PAT. The inheritance tax nil rate band for 13-14 and 17-18 is 325. Irrelevant. Irrelevant. Why irrelevant? Because during the lifetime, there is no tax on PAT. During the lifetime, when the donor is alive, there is no tax IHT on PAT. Okay. Now, I just explained that 15% of the lease rental is not allowed. That's why I just added back 15%. 15% of the lease rental is not allowed. So I just added the 15% of 3,200. That's what I did. Now next. So what is the amount? My dear student, look at here. What is the amount of the nil rate band available in calculating the additional IHT due to the gift of the antique painting as a result of Gabe's death? Okay. Now, let's plot it. What is the date of death? Okay, not given, but we don't. Yes, it's given. 22nd November 2021. Let's make the sketch. This is death. Yes. And when is the first PAT is on 5th of May 2013. The second one is on July 17. On July 17, this is the PAT was 370. The PAT was 370. Now, okay. And here the PAT was how much? Here the PAT was how much? $200,000. Okay. Right. Now the major question. You know, when you are alive, you don't need to pay any tax. When you are alive, you don't need to pay, donor don't need to pay any tax on PAT. Now, at the time of death, yes, it becomes chargeable. Now let's do it. So this is the date of death, and the most important thing is, let me change it. November 2021, sorry. Okay. Now the most important thing is go 7 years back. So 2021 minus 17 for 7 years is how much? 14. So this will be November 14. Okay. So yes, both PATs lies within 7 years. Now, just use your brain. You will walk left to right. First, you will come seven years back. First of all, you will come 7 years back, and then you will walk left to right. So this PAT, first of all, you will calculate tax on this PAT. And as this is 200K, as this is oh, sorry, it's 2013. My mistake. Sorry. This is 2013. Let me write it. Sorry. If you go 7 years back, so it's November 14. And yes, the date of this PAT is May 2013. I've written the date correct, but yes, May 2013, this is the PAT of 200K. Okay. Now, that means this question will be much easier. This question will be much easier now. There is no tax on PAT in the lifetime. And when you die, when a donor dies, then the PAT is only chargeable is if it falls within 7 years. If it falls within 7 years of the death. So this is the date of death. And if you go 7 years back, only one PAT lies. Okay. So now there is no tax on this PAT. There is no tax on this PAT, and you don't even need to calculate it. You don't even need to calculate it. Just forget about it. So you have only one PAT. Okay. So it's 370,000. That PAT is how much? That PAT is 370,000. And you know this, that NRB is 325,000 for the death year. At the year of death, your NRB is 325,000. Okay. And you know, NRB is the cumulative effect of 7 years. So if you come here, if you come on July 17, and if you see 7 years back, so there is no gift on which you have calculated tax. There is no gift on which you have calculated tax. So NRB is total free. So it will be used here. It will be used here completely. It will be used here completely with this stuff. So 370 minus 25 is, I think, how much? 45. 370 minus is 45,000. Okay. And 45,000 times how much? 40% is how much? 45,000 times 40% is how much? Okay, wait. I haven't read the requirement. I'm just calculating the tax. Okay. In the question, they are saying, what is the amount of nil rate band available in calculating the additional IFTS? This is available. 325,000 total. 325,000 is available. Yes, no need to do extra efforts. Total 325,000 is available. You don't need to even calculate the tax. See, this whole amount is available. This whole amount is available. Total 325,000 is available. Total 325,000 is available. Okay. Right. And yes, if they ask you to calculate the tax, what will be the tax? 45,000 times 40%. It will be, I think, how much? 18,000 or something. Yes. But no need to calculate. No need to calculate. One lesson I would like to give you, that the reading of requirement is very important. Even in my lectures, I have said many times that invest most of the time, your precious time in reading the requirement. That is the game, because we all know the rules of tax, but what we do sometimes we see I have even skipped the requirement. I was solving the complete question. Okay. So the most important thing is read the requirement. Okay. Otherwise you will waste your 1 minute extra by calculating tax. The tax calculation will, in this question, the tax calculation is irrelevant. You just have to tell how much NRB is available. And yes, complete 325,000 NRB is available. Complete 325,000 NRB is available. Okay. Next question. This is related to CGT. Naomi realized a chargeable gain of chargeable gain. See, this is not taxable gain. Chargeable gain means before annual exemption. Chargeable gain means before annual exemption. No, NRB is complete 325,000. My dear student, NRB will be complete 325,000, because in last 7 years, nothing was chargeable. From 1st July 2017, if you are standing on 1st July 2017, and if you look back last 7 years, there is nothing on which you calculated tax. Okay. That's why the old PAT, the May 2013 PAT, the May 2013 PAT was not chargeable, okay? Because it was before 7 years of death. Now listen, Naomi realized chargeable gain of 30,000. See, the word is chargeable gain. The gain related to disposal of residential property. So it's RPG. This gain is RPG, okay? And you remember the tax rate of RPG? RPG is 18 and 28, 18% and 28%. Hope you remember. And did not qualify for business asset disposal relief. Did not qualify for business asset. They are openly saying that no business asset disposal relief is available here. Okay. Now, in the tax year 21-22, Naomi had taxable income of 29,500 and she contributed 2,000 into her personal pension scheme. She contributed 2,000 into her personal pension scheme. Now wait. You remember what are the normal bands? What are the normal bands? The normal bands are 37,700, 0 to 37,700, and the second band is 150,000. Hope you remember. Now, you all tell me, for individuals, when do we extend the bands? For individuals, we extend the bands because of two things. For individuals, we extend the bands because of two things. Number one, gross PPC. Remember the gross PPC thing? And the second thing is we adjust the band for gift aid donations, right? So in this question there is no gift aid, but yes, you need to calculate the gross GAD, gross PPC. So how much is the net PPC? Your personal pension net is 22,000. So how to gross it up? 2,000 divided by 80 times 100. 2,000 divided by 80 times 100, it's 2,500. Okay. So students, because of this, you will extend your band. So 37,700 plus 2,500. Can anybody tell me? Okay. This will become 40,200. Thanks a lot. 40,200. Now your capacity of the first band is 40,200. Now go relax. How much is your taxable income? Your taxable income is 29,500. And one more thing I want to see, the RPG. How much is your RPG? Your RPG normal is 30,000, but it is written clearly in the question that this is the chargeable gain. This is the chargeable gain. So chargeable gain is the gain which is before deducting annual exemption. Chargeable gain is the gain which is before deducting annual exemption, okay? So first we need, for tax calculation, yes, you need to deduct annual exemption. And we all know what is the annual exemption is. It's 12,300. Okay. So can anybody tell me taxable gain? What is the taxable gain? What is the taxable gain? It's, I think, 17,000. Yes, 17,700. Okay, 17,700. Now go very simple. For tax calculation, first you need to calculate. Calculate on taxable income like non-saving interest and dividend. But in this question, you don't need to show the working. You don't need to show the working of income tax. So now, so 29,500. And what was the capacity? Original capacity of your band? 40,200 was your original capacity. So this taxable income will consume 29,500. This taxable income will consume 29,500. Student, please see. So 40200 less 29,500. 40200 less 29,500. Can anybody tell me the difference? 40200 less 29,500. What is the remaining difference? 10700. Okay. So now you have 10700 capacity left for CGT. 10700 capacity left for CGT. Now let's start CGT. In this CGT calculation, you have RPG, and you know your gain is 17,700. So when you compare 17,700 with 10,700, so obviously you will completely consume this remaining capacity. So how much is this? It's 10,700. And what is the rate of first band of RPG? What is the rate of first band of RPG? It's, I think, 18%. How much is this? 10,700 times 18% is 3,186. Okay. And now out of this 17,700, we have calculated for 10,700. So remaining gain is 7,000. So 7,000 times 28% for the remaining one. How much? 1926. 1926. Can you add these two? Can you add these two? 3186 plus 1926. 3186 plus 1926. First one is 1926. Okay, sorry. First one is 1926. Somebody. And what is the second one? What is the second one? Please tell me. It's 1960. Okay, no issue. Can you add these two? Can you add these two? 3886. 3886. Yes. Change this. This is some typing error. This is 3886. Okay. This is 3886, right? 3886 is your answer. 3886 is your answer. 3886 is the answer. There was some typing mistake. My assistant told me 3886 is the answer for this. 3886 is the answer for this. Okay. You got it? 3886 is the answer for this. You guys got it? You guys understood it? Now you tell me, how do you rank this type? How do you rank this type of question? Was this question difficult for you or easy? Was this type of question difficult for you? It was basic tax calculation. It was basic tax calculation, basic tax calculation. The difficult MCQs are always different. This was not difficult. Okay. Again, the same question which we did in question number 1. Again, the same question which we did in question number 1, which we did in question number 1. Okay. It is related to the penalty of late filing of tax return. It is not, listen. Somebody is asking why a annual exemption just reduces the gain. It has nothing to do with the band. Annual exemption, student, just reduces your band. It has nothing to do. It just reduces your chargeable gain. It has nothing to do with the band. Please. Now, this is again question number 9. Again relates to question number 9. Again relates to late filing of tax return. See, this is not tax. This is late filing of tax return, and you are doing individual. Okay. Now, first of all, let's check the fiscal year. Which fiscal year is this? You are talking about 1920 fiscal year. You are talking about 1920 fiscal year. So, you know, for 1920 fiscal year, for 1920 fiscal year, the due date is 31st of January 21. This is the due date. 31st of January 21. This is the due date for filing tax return. This is the due date for filing tax return. And now listen, the return showed Hassan filed his self-assessment tax return for the tax year 1920 on, this is a typing mistake, okay? This is 31st August 21. I'm correcting it. This is not 22, it's 31st August 21. I've just corrected it, okay? The return showed a tax liability of 6,200 and which Hassan paid on full on the same date, that is 31st August 2021. Now, you tell me, what was the due date for filing tax return? What was the due date for filing tax return? It was 31st January 2021. Now, Feb, March, April, May, June, July, and August. You are 7 months late. You are 7 months late. 7 months late. Open your ears. So for first 3 months, you remember, for first 3 months, there is fixed £100. For the next 3 months, it's £900. For first 3 months, it's £100. For next 3 months, it's £900. It's £900. And once you have crossed the 6 months, then you will have to check higher off. Then you will have to see higher of number one, £300, and number two, 5% of tax liability. 5% of tax. How much is the tax? How much is the tax? Tell me. The tax liability is 6,200. So this means 6,200 times 5% is how much? 6,200 times 5% is how much? It's 310. Okay. Now you tell me, out of this 300 and 310, out of this 300 and 310, which number is higher? Which number is higher? The number which is higher is 310. Okay. So now let's add up the penalties. Let's add up the penalties. 3 penalties you need to pay. The first one is 100. The second one is 900. And the third one is 310. So let's pick it up in this. This is the first. See which 3 of the following. You have to pick 3 answers. You have to pick 3 answers with 3 of the following penalties. So this is £100. This is 900. And this is 300. This is 310. So these 3 are the answers. These 3, first, second, and third. I hope you got it. I hope you got it. This is just the same question as before. This was same question as before as the last question. Now, question number 10. Question number 10, scoring area. Easy marks, easy marks. Jack is registered for value-added tax and has joined flat rate scheme. Now, quick, tell me. In flat rate scheme, there are 2 news. One is bad news and one is good news. In flat rate scheme, when I teach in this style, there are 2 news. One is bad news and one is good news. What is the bad news related to flat rate scheme? That now you cannot claim input tax. Now you cannot claim your genuine input tax. You are not allowed to claim. You are not allowed to claim your genuine input tax. But what is the good news? The good news is that you have received 20% output VAT from your customers. You have received 20% output VAT from your customers, but you don't need to pay complete 20% to government. You don't need to pay complete 20% to government. You have to pay through a reduced rate, Okay. So in flat rate scheme only there is output VAT. And what is the formula? Total sales inclusive. See, this is very strict of VAT multiply by the flat rate, which is 8% in this question. Total sales inclusive of VAT multiply by flat rate, which is 8% in this question. Okay. So forget about the expenses. You can't claim input VAT now. Forget about the expenses. You cannot claim input VAT. You cannot claim input VAT, my dear students. You cannot claim input VAT. So how much is your sales? You have 10,000 per month is the sale, and your purchases irrelevant. For expenses or purchases, you cannot get any input VAT, so it is irrelevant. So now both of these amounts are exclusive of VAT. Now be very careful. The sales already given in this question is exclusive. So first of all, 10,000 is your exclusive sales. This is exclusive. How you convert exclusive sales into inclusive? How you convert exclusive sale into inclusive? First, apply 20% VAT on it. So 10,000 times 20% is 2,000. 10,000 times 20% is 2,000. Okay. So your inclusive sales is 12,000. Your inclusive sales is, my respected student, is 12,000. Okay. And now what is the flat rate? It's 8%. Simple. So 12,000 times 8% is, I think, 12,000 times 8% is how much? 960. Yes. This is the VAT payable. This is the monthly VAT liability for you. This is the month. Very simple. There is no input VAT in this type. Now next. It's a good question. Read it, read it, read it. Giving you 1 minute. Read it and decide. Read it and decide. Read it and decide. This is a very good question. Read it and decide. Okay. Now, you know, for corporation tax, there is one topic which we call limit proration. You need to prorate. You need to prorate the limits. You need to prorate the limits. Okay. And for limit proration, you have to see the members. You have to count. You have to count the members. You need to count the members of 51% group. Okay. So for that, first thing is you must have 50% plus holding in that company. And no issue if it is a foreign company. No issue. No issue if it is a foreign company. No issue. But 50% holding. And the second requirement is that company must be part of your group on the last day of previous accounting period. This is the key. This is the key. That company must be part of your group on the last day of previous accounting period. Don't forget. Okay. So now Z company has the following shareholder: 100% in ABE Limited, A Limited, which is resident overseas. No issue. Yes, this it qualifies. 80% also qualifies. Also, apparently it qualifies. 80% is greater than 50. C Limited does not qualify. Now, very important line. Zen Limited has held the shares in ABE and CAN for many years, but only acquired its shareholding in B Limited on 1st of March. Here, we acquired the B Limited here, B Limited here. So that means B Limited was not part of our group on the last day of previous accounting period. B Limited was not part of our group on the last day of previous accounting period, previous accounting period. Okay. So we are not going to include B for the limit proration. And we so also cut B, and we have and C has the holding of less than 50%. C has the holding of less than 50%. So only A Limited, Z Limited, and A Limited, two members. C, we have one member of 51% group, that is A, and one is us. So 1 plus 1 is 2. So normal limit is 15 lakh. Normal limit is 15 lakh and there are total two members, V and A. That means V means Zen Limited, us, and A Limited. So 1 plus 1 is 2. So you will divide the limit by 2. This will make 7,50,000. This will make 7,50,000. This will make 750,000. This will make 750,000. This is the answer. What is the relevant profit threshold for determining whether Zen Limited will have to pay its corporation tax by quarterly installment payment for the year ended 31st March 2022? This is, you don't have to guide. Please listen to me. You don't need to guide. You don't need to guide whether you will pay an installment or not. Just tell them the limit. That's it. Tell them the limit, which limit we have to use. 750,000. That's it. We will be using 750,000 limit. Those who have studied corporation tax, they can do it easily. Those who have studied corporation tax, they can do it easily. Next. It's income tax now. Again, you have income tax. Brian had the following income and chargeable gain. So your employment income is non-saving, okay? Non-saving income is 43,000. And if you use your common sense, you have a personal allowance. See, 43,000 is your employment income. So your ANI will also be 43,000. See the circumstances. Seize the circumstances. So you will have 12570 simple personal allowance. What is the taxable income? Tell me. What is the taxable income? Respected students, please tell me what is the taxable income. 30 something, 30430. Thank you. Okay. Now, your first band is 0 to 37,700. Okay. Now, let me write 37,700 here. And first of all, it will consume your first band 30430. So how much capacity will be left? How much capacity will be left? Can you tell me? $7,270. Okay. Now, what is the chargeable gain on the sale of antique wares? Chargeable gain. Now I have a question. This chargeable gain is RPG or NG? This chargeable gain is RPG, residential property gain, or normal gain? Come on, tell me. Normal gain. Very good. Because this is not property. This is not property. Very good. So your NG normal gain is 18,000. First of all, deduct the annual exemption of 12,300, which makes you how much? I think 5,700. 5,700 is the taxable gain. Am I right? Okay. So now your taxable gain is very less amount. So it will easily come in the first band. And for the first band, normal gain tax rate is 10%. For the first band, normal gain tax rate is 10%. So answer is your CGT. Your CGT is 570. Your CGT is 570. This is the answer. This is the answer. This is the answer. Your CGT is 570. 10%. Why? Because for normal gain, the first band tax rate is 10%. First band is 10%. The second band is 20%. First band is 10% and the second band is 20%. Now the next thing, question number 13. Question number 13. If you have your exam kits with you, it will be very helpful. If you have your exam kit with you, it will be very, very helpful. Okay. Listen. Hope you remember when you studied this topic of residency for individuals. Residency for individuals. So there were some compulsory tests, compulsory non-residency test, then compulsory residency test, and then ties and days, ties, UK ties and days of stay. So this question relates to the third category. This question relates to the third category, UK ties and days, UK ties and the days you stay in the UK. Okay. So whenever you come to the third step, you have to check one thing, that whether you are previously resident or you are not previously resident. These are the two columns, and this thing will be given to you in the exam. Previously resident or not previously resident, previously resident, or these are two columns. Okay, you have to select only one column. Now read the question. Pierre was born in France. He has been working full time in the UK and been UK resident for the tax purposes for last 5 years. That means this column. That means this column. Yes, this guy was previously resident. This guy was previously resident. This guy was previously resident. Okay. He plans now he plans to return to France in the tax year 21-22. Now he wants to go in France. Okay. Now what his objective, right? Read this objective. Assuming he has two ties within the UK in the tax year 21-22, what is the maximum number of days that peers could spend in the UK without being treated in UK resident in the tax year 21-22? So that means he does not want to be UK resident now. He want to stay away from this residency. Okay. So how much maximum days he can stay? Now wait. I hope you have your exam kit. Please open your exam kit tax rate columns. Exam kit tax rate columns. If we stay 91 days to, wait, let me check. 91 days, and what is the next limit? $91 days to 120. Yes. Listen, and the previous one is 46 to 90. Listen to me. First of all, in the question, they have told you the ties are two ties. So this thing is relevant for you. So if he is already previously resident in the UK, and if he has two ties, and if he stay 91 days or more, he has already two ties, and if he stay 91 days or more, so he will become resident. But he wants to stay away from residency. He wants to become non-resident. So we'll advise that just leave the UK in 90 days. Just leave the UK in 90 days. You can just stay in 90 days, because if you stay one day more, you will become resident. And in the question, they are saying he wants to become non-resident. So the answer is B. This is the answer. This is the answer, my dear student. Obviously you must know. You must know the rules. You must know the topic. We are on the revision days. Obviously, we have a proper class for this. We have a proper class for this in our learning management system. Now the next question, this is dodgy question. This is dodge. Looks like very simple, you know. This is the issue with MCQs. There are some MCQs, they looks very easy, and an obvious answer is also given. Very easy and obvious answer is also given, and that is a dodge. Even if you guys have ever studied the aptitude test preparation, in the aptitude test preparation, they also teach this thing. They also teach this thing about dodge. This question is very simple but very dodgy. Very simple, very dodgy. Come on, you guys, tell me the answer. I'm here to watch. Very interesting. Tell me the answers. Come on. It's a 10-second question. It's a 10-second question, but you can do mistake. Okay, let me tell you. What Reagan received the following income during the tax year 21. Which are the following? Which are the taxable for which are the taxable for income tax, not CGT. CGT is a different thing. They are openly asking you for income tax, not CGT. Okay. So interest on, yes, this investment account, national saving and investment account is taxable. Yes, certificates are exempt. Read my lectures or read the book. Certificates are exempt, but investment account is taxable. Interest on company's loan stock, yes, whenever you invest in any, whenever you give loan to any company, that interest income is full-time taxable. That interest income is full-time taxable. Proceeds from, and no, certificates are exempt. Certificates are exempt for income tax. And this profit on sale of shares, yes, it is taxable, but it goes in the CGT head. It goes in the capital chargeable gain tax head. And they are asking you just income tax. So this is also not the answer. So answer is C. I have seen some student gave answer B. And you know, this is a dodge. In this question, this is the dodge. Yes, read the question carefully, read the requirement carefully. This is the reason of failure. I'm telling you, anybody of you, even the position holder guy can do this mistake. If your attention has been diverted, you can do mistake. Okay, next thing is, Shania bought a house in January 21, which she rented out furnished to student. You can give to anybody. You can give to anybody. No issue. This is not furnished. This is not rent a room relief. Listen, in rent a room relief, the owner stays in the house. The owner stays in the house and owner gives 1 or 2 rooms. 1 or 2 rooms for letting. Owner stays in the house and owner gives 1 or 2 rooms for letting. Okay. So this is not the case. This is the complete house. They have given the complete house. Okay. So this question does not relate to rent a room relief. This question does not relate to rent a room relief. Hope you understand it. She rented out the furnished to student from 1st June. She charged a rent of 600 per month payable in advance. Yes. As this is the question of individual, so it's cash basis. Remember, now for individual, property income is cash basis. Now wait, first of all, write the fiscal year. Your fiscal year is 6th April 21 to 5th of April 22. Your fiscal year is 6th April 21. Your fiscal year is 6th April 21, my dear student, to 5th of April 2022. 5th of April 2022. This is the fiscal year. Okay. Now, she charged a rent of 600 per month payable in advance in August 21. See, in August 21, she paid 900 pounds for the windows. August 21 falls in our fiscal year. August 21 falls in our fiscal year. Okay. She paid 900 pounds for the windows in the house to be repainted. Yes, repainting is like repairs. It's not an improvement. And 500 for replacement carpets. It's not, wait, if you buy something first time, you know the rules. If you buy something first time, it's improvement. But when you replace it and nothing is written about improvement, when you replace something for property income and nothing is written about the improvement, then that expense is also allowed. So this is also allowed and this is also allowed. These two are allowed. Look at here. Now, first of all, let me write June, July. You have given on June, July, August, September, October, November, December, Jan, Feb, March, and April. See, wait. 1st June, then 1st July, 1st August, 1st September, 1st October, 1st November, 1st December, 1st January, 1st Feb, 1st March, and also 1st April. Also 1st April falls in your fiscal year. Also 1st April falls in your fiscal year. You remember this? So now you tell me, you have given from 1st June 2021. So how many months, how many see rent received? How many month rent received? From June, July, August, September, October, November, December, Jan, Feb, March, and April. It's 11 months. So 11 multiply by how many months? 600. 6,600 is your rent received less allowed expenses. Less allowed expenses. Wait, both expenses are allowed. One is 500. Sorry, one is 900, and the other one is, how much is the property business profit? How much is the property business profit? How much? See this thing. Wait, let me tell you one thing. This counting of months is very technical for property income. I have received messages from students. They do mistake in this. Be very careful. You must know the fiscal year, and you must know the payments is in advance. Payment is in advance. Advance means on the 1st day. So that means 1st June, 1st July, 1st August, 1st September, 1st October, 1st November, 1st December, 1st January, 1st Feb, 1st March, 10 months, and then 1st April also. 1st April also, because see, your fiscal year is this. This is your fiscal year. Your fiscal year ends on 5th April 2022. Your fiscal year ends on 5th April 2022. Little mistake will cost you 2 marks. Let me tell you one thing, now ACCA has given this facility like ICAEW. You guys know this thing. Listen, if somebody got failed, he can see the breakup of marks, that how much he scored in section A, in section B, in section C. How much he scored in section A, section B, and section C. This breakup is now available. Now ACCA has given this facility like ICAEW. ICAEW has given this facility since years, that you can see. You have to write an email, or you can get it. So I met one student. She got failed in audit paper. So she was saying, audit paper, I'm talking about AA paper. She said, out of 30 marks, first 30 marks MCQ, I just scored 4 marks. I saw the report. So don't think that MCQs are piece of cake. They are technical. They are dodgy. You must have a very good concept for this type of things. In descriptive question, there is a big question, and you can write a lot. You can solve a lot. Okay. So be careful with these MCQs. And now this facility is available, that they will give you breakup of marks, that how much you scored in section A, B, and C. Okay, next question now. Okay, try it. Try this question yourself. Try this question yourself. Try this question yourself. Try it. Question number 16. Okay, now listen. In employment income, the rule says only expenditures are allowed if they are wholly, if they are wholly, exclusively, and necessarily for the purpose of employment. Necessarily for the purpose of employment, there must be no duality. Hope you remember the lecture. There must be no duality. That means you, in any case, you are not getting any personal benefit. In any case, you are not getting any personal benefit. Okay. Now, Nazar is the finance director. Obviously, director is also the employee of a large company and incurred the following cost during the year 21-22, which is the deductible from his employment income. Now, wait. You remember one concept, I really emphasize this concept in my class. I really emphasize this concept. You know, in employment income, there are two major things. In employment income, the first thing we call it benefits. Benefits. Normally employee receive benefit from the employer. Okay. And the second is called deductions. Deductions means the things normally which are paid from employees pocket, or the things whose burden is going to bear by employee. Okay. So there are two things. One is benefit, one is deduction. One is benefit, one is deduction. Can you anybody tell me this question is related to benefits or deductions? This question is related to benefits or deductions? This is deduction. Yes, very good. This question is related. See, improve your identification. Identification is $1 million thing. The real thing is identification. Try to identify things. Try to make notes for identification. That is what your direction should be. Yes. And now there are two types of benefit. One is taxable benefit and one is exempt benefit. This question is not related to benefit, but I'm telling you, there are two types of benefit in employment income. One is taxable benefit and one is exempt benefit. The second other thing is called deductions. Deductions are either allowed or they are not allowed. Deductions are either allowed or they are not allowed. Deductions are either allowed or they are not allowed. Okay. So, you know, if there is a deduction or there is an expense by employee, and if there is some sort of duality or personal benefit in that, then tax department won't allow. So subscription to local health club where he frequently meets his clients, no, it's not allowed. Why? It is okay, it's okay, you meet your clients, but yes, when you go to gym, when you go to swimming pool, you will get a personal benefit as well. So this is not allowed. Now, tips, let me read the C and D. Tips given to taxi driver if he chooses to take a taxi from home to work. No, home to work also not allowed. Home, if you have studied qualifying traveling expenses topic. So home to work, no expenses allowed. Why? The tax department says your job starts from the premises. Your job starts from the premises. So this is not allowed. Cost of 2 new suits. No. If you wear expensive suits, you will look smart. You will look smart and you will attract new friends. So that's also your personal benefit. Okay. So my dear student, A, C, and D are not the answer, but yes, travel between two offices. Yes. Once you read the offices, once you read the employment premises, and now you are going to another office, this is all allowed. This is all allowed. This is all allowed. This is allowed. Now, this is good question. I hope you remember a topic which we call chattels. You know chattels? Straight away, it's this MCQ is class MCQ, class, what we do in class. One is called wasting chattels. Chattels are basically, chattels are tangible, movable properties. See, this pen is chattel. This bottle is chattel. This glass is chattel. This phone is chattel, right? The jewelry is chattel. You getting my point? Tangible, movable property. Yes, your dog, your cat is chattel, tangible, movable property. Your dog, yes, your horse is chattel. So for tax department has divided chattels into two categories. One is wasting chattels and other is non-wasting. Wasting chattels. Wasting chattels are the chattels with life of less than 50 years, less than 50 years. So normally wasting chattels are exempt. Normally wasting chattels are exempt. Wait, but they are only taxable. Open your ears and open your eyes and use your brain. You have attended the classes. They are only taxable if used in business and capital allowances claimed. Wasting chattels are only taxable if they are used in business and tax and capital allowances claimed. Okay. Non-wasting chattels, there are 4 cases. Yes, they are taxable, but they have 4 separate cases. Non-wasting chattels are the chattels with life of more than 50 years. With life of more than 50 years. So normally antique items comes in this non-wasting chattels. Antique items comes in this non-wasting chattels. Okay, now read the question. Now read the question very carefully what they are asking. Which of the following capital disposals are chargeable? They are just asking which are chargeable, which are chargeable. So you need to remove the exempt items. You need to remove the exempt items. Only chargeable items you need to take. Okay, listen. A machine, you know, machine is a chattel. Machine is a chattel, tangible, movable property, which she used for business purpose. Yes. And you know, machines are normally wasting chattels because what is the life of a machine? 10 years, 5 years, 6 years. So this is wasting chattels. This is wasting chattel, but it is used in the business. It is used in the business. And obviously you have studied the capital allowance chapter. You have studied the capital allowances chapter. So yes, we can claim capital allowances on machine. So wait, hold. Point number 1 is a wasting chattel. Yes, point number 1 is a wasting chattel which is used in business and capital allowances claimed. So it is chargeable. It is not exempt. So it is chargeable. Yes, this is the answer. This is one of the answer. Machine is a wasting chattel and it is used in the business. And yes, capital allowances claimed. So yes, it is chargeable. It is chargeable. Okay, now a greyhound. Greyhound, you know, it's a dog. It's a dog. Greyhound is a dog. Now wait, you tell me, dog lives more than 50 years or less than 50 years? What do you say? Dog lives more than 50 years or less than 50 years? Use your brain. Obviously less than 50. Obviously less than 50. So it's a wasting chattel, and you don't use normally dogs in business, and you don't claim capital allowances on business. So it is exempt. It is exempt, and this is not going to be the answer. In this question, you have to pick chargeable. In this question, you have to pick chargeable. So point number 2 is not chargeable. It's exempt. Now, point number 3, a painting. Painting is again tangible, movable property. And yes, painting has lives of many years. You have seen the exhibitions on internet and you have seen exhibitions. There are paintings, they are 70 years old. They have long life. And you know, the value increases as the time increases. The more it is ancient, the more it is old, the more it is expensive. Okay. So the paintings are non-wasting chattels. And yes, non-wasting chattels are bought for 4,000 and sold for 75%. There is a case number 3. There is a case number 3 if bought for less than 6 and sold for more than 6. So yes, it is chargeable. And finally, land. My dear student, although land is not a chattel, but yes, land is a chargeable asset. Land is like a plot. People invest in plot land for capital appreciation purpose. So it's a properly chargeable assets. So you bought it for 1,000 and sold for 5,200. Yes, it is also chargeable. So 1, 3, and 4. 1, 3, and 4. This is the correct answer. This is the correct answer. Sorry, I'm taking more time. This is the correct answer. Did you understand the question? Did you understand the question, dear students? Fourth point is very simple. It's land. It's like land and building properties. Yes, properties are chargeable for capital gain tax purpose. For example, you bought a property for £1,000 and you sold it for 5,000. So the top is your chargeable gain. Properties are always chargeable, are applicable for chargeable gain tax. Now, come on, try the next question. Try the next question. It's again theory. Try the next question. And wait, this question relates to something, some points related to self-assessment. Or there is a question number 1. There is a question number 1, sorry, chapter number 1 in your book. There is a chapter number 1. Even I teach that question in my first class about economics and on all general thing. This thing is, I think, part of this ethical issues. This is very technical. Some students giving correct answer, okay. In my classes I sometimes say that you are not allowed to blackmail the client. You are not allowed to blackmail your client, okay. This is very dangerous. Now listen, you are a trainee chartered accountant, and your firm has a client. Let us say we have a firm and we are giving tax services to a client, has refused to disclose. Your client has refused to disclose a chargeable gain to HM Revenue and Customs. That means there is a real chargeable gain, but the client is not disclosing. So what you will do, listen, you will first guide him to disclose. If he does not agree, you will have to report. If you are not paying tax, this is the case of money laundering. So there are officers of MLRO, money laundering reporting officers, within the organization as well. There are, in big companies, there are money laundering reporting officers are there. So you have to report. Remember this word MLRO. This is written in your book. You have to report MLRO for that. Or you can just teach the client that please disclose it. This is unethical. You are not here to blackmail the client. So you don't need to report this to HMRC. It is written clearly in the book and in many MCQs. If you have done the kit, you are not allowed to report to HMRC, or you are not allowed to blackmail the client. See, so from an ethical point of view, which two of the following actions could be expected from your firm? The first thing is reporting under money laundering. Yes, not paying tax is money laundering, right? Okay, so this is the first thing. You will report to MLRO, advising the client to make the disclosure. That's it. Informing HMRC of the non-disclosure. No need to report HMRC at all. Warning the client that your firm will be. Warning is just like blackmailing. This is also not allowed. So A and B is the answer. That's why I advise my students sometimes, listen to me very carefully. If you want to read book, you can read chapter number 1. Chapter number 1 is good for read. That is economics. You can read self-assessment chapter. That's also a good read. You can read NIC chapter, and something about capital allowances is also a good thing. The capital allowances theory is also a good read. Because sometimes 2-4 marks things comes from these things, and one should not skip these marks. Okay. Okay, this is the very easiest, not easy, it's easiest. In corporation tax there is a topic group of companies. In corporation tax there is a topic group of companies. I'm sure you have done it or you are doing it. I'm sorry if somebody has not done it, so he can see the recording. But in corporation tax there is a topic of group of companies, 75% group. So in 75% group you can transfer. There is a surrendering company and one is claimant company. One is surrendering company, the company which is surrendering the loss. The other company is claimant company, which is claiming the loss. Okay, listen. So look at here. Surrendering company can transfer the trading loss, and claimant company will set off this trading loss, will use this trading loss in front of the TTP. Okay, but there is one more condition. The accounting dates must be aligned. The accounting period must be aligned. And if the accounting period is not aligned, then you have to show some working. If the accounting periods are not aligned, then you need to work hard. You need to do some apportionment. Same is the question here. For the year ended 31st, first of all, the loss of the first company, Hello Limited, is for the year ended 31st March 2022. So this will start on 1st April 21 and this will end on 31st March 22. Okay. And the loss is 180K. Loss is 180K. Okay. Now, Hello has owned 100%. 100% means greater than 75%. So yes, the 75% group has been formed. Of the ordinary share capital of Hello Limited, since it began trading on 1st July 2021. Okay, that means the accounting period for Hello Limited is 1st July 21 to 30th June 2022. Now let me change the color. See, 1st July 21 to 30th June 2022. This is the accounting period for Hello Limited, and Hello Limited has a TTP of, or trading profit, you call it trading profit or TTP, no issue, no other income is given, 224,000. Now, can anybody tell me, neither company has any, okay, what is the maximum amount of group relief? What is the maximum amount of group relief which Hello Limited can claim from Hello Limited in respect of the trading loss of 180,000 for the year ended 31st March 2022? Now you tell me, how many months are overlapping? Wait, July, August, September, October, November, December, Jan, Feb, and March. See this? And again, July, August, September, October, November, December, Jan, Feb, and March. These 9 months are overlapping. These 9 months are overlapping, These 9 months are overlapping. Are you getting? So let's calculate 9 months. This 180K is also for 12 months. This 180K is for 12 months. So let's make it 9 upon 12. So 180 into 9 upon 12. How much? It's 145. 180 into 9, it's 135. Sorry, 135. And now this 224 is also for 12 months. This 224 is also for 12 months. Can you do 9 upon 12 for 224? 224,000 times 9 upon 12. 224,000 times 9 upon 12. Can anybody do? 168K. 168K. Now, you know, for this 9 months, the profit is 168K. Wait. And for this 9 months, for this 9 months, the loss is 135K. So yes, complete 135,000 will be transferred. Complete 135,000 can be transferred because the other company has enough amount of profits. Or you know, there is a shortcut. There is a shortcut we teach in the class, that is lower off. There is a shortcut which we teach in the class. Always do apportionment and then write lower off. Always do apportionment and then write lower off. So the lower off is 135K is the answer. 135,000 is the maximum amount of loss which can be transferred. 135,000 is the maximum amount of loss which can be transferred. Yes, I'm sure only those students can do this question, those who have studied the topic. If somebody has not studied the topic, then obviously it's a new thing for them. Okay, next. For the year ended 31st March 21, Sizable Limited had taxable profits TTP of 820,000, and for the year ended 31st March 2022, it's 970,000, right? Wait. Okay, now listen. Here the TTP is how much? 820K. Here the TTP is 970K. Now, the profits accrue evenly throughout the year. Sizable Limited has only 151% group of companies. So we are also, and one more member. We are the parent company and one more member. So you need to apportion the limits by 2. You need to apportion the limits by 2. So it makes 750,000. Your limit is 750,000. Now wait. As your TTP is greater than limit, yes, you are a large company. As your current year TTP is greater than the limit, so yes, right now you are a large company, but still you can get exemptions from installments. How? If you are not a large company last year, then you will get the exemption. But unfortunately, we are also large last year. See, our last year TTP is also greater than 750,000. So we are large company last year as well as we are large company this year. So we are talking about 31st March 2022. In the year ended 31st March 2022, we are not eligible for any exemptions from installment. So yes, we have to pay tax and installment. And if the accounting period is 12 months, see, accounting period is 12 months. When the accounting period is 12 months, you have to pay complete 4 installments. You have to pay complete 4 equal installments. Now let's calculate installments. Installment is very easy. Listen, let me write corporation tax. Your TTP is 970,000. What is the rate of tax? It's 19%. The tax rate is how much? 19%. Tell me. First of all, calculate the total tax. 970,000 times 19%. What is the total tax? Tell me. 184,300. Thank you, students. 184,300 is your total corporation tax. 184,300 is your total corporation tax, and now you have to pay in 4 equal installments. Now you need to pay in 4 equal installments. So what you will do, one installment will be 184,300 divided by 4. 184,300 divided by 4. Can anybody tell me? Yes. 46075 is your one single installment. So this is your answer. 460, you have to pay in 4 installment. Now they are making you a big fool by writing balancing payment. You know the balancing payment topics. The balancing payment topic comes in individual. In individual self-assessment, you study balancing payment. In corporation tax, there are simply installments, or the second rule is 9 months plus 1 day. For small companies, 9 months plus 1 day. The balancing payment topic is with individuals. And you know, as I've been teaching it for now 18 years or so, this paper, since the first day of my teaching taxation, I say that this is a very great area of your examiner of F6 paper to ask the differences between individuals and companies tax. Individuals and company, even you guys should sit and discuss the differences between individuals and companies. Even, you know, it's my normal habit. I will send you the on WhatsApp group. There are many differences I have written by myself, the differences between individuals and companies. And even you should write with your own hands. You should write this topic, the difference between individuals and companies. Remember, this is the area on which examiner plays. This is the area which is this is the favorite area. You know what he will do with you? The question relates to companies and he will give you the requirements of individuals just to confuse you. One more thing. Can anybody tell me the 9 installments thing? Can anybody tell me what is this 9? Why this smart examiner has written 9 installments here? Which topic is related to 9 installments? Which topic? Nine installments is what you are saying. Yes, VAT. And which scheme? Which scheme? Tell me which scheme 9 installments? Annual accounting scheme. Very good. Very good. In annual accounting scheme, you pay in through 9 installments and payment on account, and then balancing payment. Please, you have to give the paper. Your brain must work. This paper is related to memorization, memory. Your memory should be very good now. Go and watch some videos how to improve your memory. The game is total memory. Let's take a 5-minute break. Let's take a 5-minute break now, okay? 5 or 4 minutes break, and then we'll do some more questions. Okay, welcome back. And now we are moving towards question number 21. Question number 21. It's basically relate to the non-vesting chattels. Non-vesting chattels. Remember the 4 cases. Case 1, case 2, case 3, and case 4. On 26th of November 21, Alice sold an antique table. See the word antique table. This antique word clearly shows you non-vesting chattels. Okay. So sold for 8,700, but he purchased for 3,800. That means cost is less than 6,000 and disposal proceed is greater than 6,000. So in this case, you have to do 2 workings. The first working is normal working. The first is normal working. Wait. In normal working, the DP is 87 and the cost is 3,800. Now, how much is the gain? How much is the gain for first working? It's 4,900. Thank you. This is the gain. And in the second working, you have to apply the formula gross DP minus 6,000 times 5/3. This is the fraction. Okay. So what is the gross DP in this question? The gross DP is 8,700 minus 6,000 times 5/3. What is this? Tell me. The second working is how much? 4,500. Okay. So now you tell me, you have to pay tax on one. Obviously, we'll go for lower off. We'll go for lower off. So this is the answer. 4,500 is the answer. 4,500 is the answer. $4,500 is the answer, right? Now, 22. On 14th of November 21, this is now again very easy question of IHT. On 14th of November 21, Jane made a cash gift to Trust. This is CLT. Okay. After deducting all available exemptions, that is annual exemption already deducted. Jane means donor is paying inheritance tax. Okay. So now for lifetime IHT, you have to use 25% tax rate. For lifetime IHT, you have to use 25% tax rate, and you need to do grossing up as well. As well. Jane has not made any other lifetime gifts. That means NRB is free. NRB is total free. NRB is total free. No previous gifts. What amount of lifetime inheritance tax would have been payable? Only lifetime IHT. You don't need to even grossing up. Okay. Let's skip the heading. Lifetime IHT on CLT. Lifetime IHT on CLT. How much is the CLT? The CLT is 800,000. Now wait, let's write the NRB. Normal NRB is 325,000. And in this question, there is no other gifts. So your complete NRB is available. Complete NRB is idle. You can use it here. So you will use it here 325,000. So 800,000 minus 325,000 gives you 475,000. Now, as the donor is paying a IHT, so the rate should be 25%. Okay. Now students, tell me, how much is this? 118. How much is 118,750? Yes. This is the amount of IHT which Jane need to pay as a lifetime IHT. Okay, again you get the same question of flat rate scheme. Again you guys got the question of flat rate scheme. In flat rate scheme, there is no input tax. The bad news and the good news is that you will collect complete 20% from the customer, but you need to pay to government. On a reduced rate. Okay, so what will be the answer? Tell me. You will only write output VAT, and you have to write total sales inclusive of VAT multiply by the flat percentage. In this question is 16.5%. Now wait, what is your standard rated sale? It's 49750. But again in this question, these figures are exclusive of VAT. See, this is what the examiner is demanding from you. So in this question, standard rated sales is giving, but this is exclusive. So first make it inclusive. So 49750, VAT should be 20%. Add 20% in this. 49750 add 20% is 9850. Now please make it inclusive. 49750 plus 9851. Sorry. How much? 49750 multiplied by 20% is how much? It's 9950. What you are doing? It's 9950. Okay. So now let's add these two numbers, 49750 plus 9950. Tell me the inclusive amount. Inclusive 59,700. 59,700. Okay. So this is your inclusive sales times 16.5%. It's 9850. You remember the rules. There is no input tax. You cannot claim input tax. You cannot claim input tax. Now, next. This is very important. This is very, very important question because you might learn something new in this. Listen. You know, keeping the records, this is for self-assessment. This is for self-assessment. Wait. Listen, for self-assessment, you know, you need to keep the tax records for certain number of years. This is the requirement of tax department. First of all, write down your fiscal year. Your fiscal year is 6th April 21 to 5th April 22. Okay. Now listen. What the rule says for 21-22 fiscal year. For 21-22 fiscal year, you have to keep your business records. You have to keep your business records for first, listen, first, after the end of the fiscal year, go to 31st January. The next 31st January, the next 31st January is 31st January 23. After the end of your fiscal year, go to the first 31st January and then count 5 years more. Then count 5 years more, that is 31st January 28. This is the date for which you have to keep business records. This is the date for which you have to keep business records for the fiscal year of 21-22. Okay. And if you are not doing business, then the due date is 31st January 24. Then the due date is 31st January 24. If you are not doing business, then for your personal records, the due date is 31st January 24. But you know the dodge. Listen, it is written clearly in the book. It is written clearly in the book. If you want, I can send you that page as well. Listen. Those who are doing business, their due date is 31st January 2028 for keeping the records. Those who are not doing business, for their personal records, 31st January 24. But listen to me, those who are doing business, their business plus non-business, all records must be kept till 31st January 2028. This is the requirement. You can read these words in the books. I repeat. Those who are not doing business, they have to keep the records till 31st January 24. This is the requirement. Okay. But those who are doing business, they have to keep their business plus non-business, both till 31st January 2028. So see, for each types of record listed below, click on the box, indicate that the date until which Ming must retain the record. See, Ming is a self-employed. Ming is a self-employed. Read the first line on the top. Ming is a self-employed. That means Ming is businessman. Self-employed means businessman. So now Ming have to keep both records for 31st January 2028. Both, because he's doing business. He's doing business. Don't forget, these are very small things. Yes, this is tricky. Now do it this. This is related to employment income. This is related to employment income. In employment income, there are two things. One is benefits, one is deduction. Now you tell me, this question relates to which part, benefits or deduction? I want to see. This question relates to which part, benefits or deduction? Benefits or deduction? Yes, this is related to benefits. I told you. Oh, it's written benefits. Sorry, it's written benefits. Benefits are the things which normally employee receive, which employee normally receive, right? And deductions are the things which is born, which is a burden on employee, which is a burden on employee. Okay. So they are saying how out of these four, there is one benefit is exempt. One benefit is exempt, you know, and that benefit is this. This is obvious answer. This is obvious answer. This is obvious answer. Check it out. You know, interest-free loan or cheap loans less than 10,000. Cheap loans less than 10,000 are exempt. This is obvious answer. Obvious answer. Okay. Now read the other three. Medical insurance. Medical insurance is not exempt. Medical insurance is taxable. Medical insurance is taxable. Okay. In normal circumstances, medical insurance is taxable. Free membership of a gym situated next door to the company headquarters. This gym and health club memberships are taxable. Only they are exempt if they are inside the premises and they are available for all employees. They are available for all employees. So there is nothing written that this is inside gym. See, this is outside the company, situated next door to the company headquarters, outside. A second mobile phone, obviously, for only one phone is exempt, the second phone is taxable. So the answer is D. In this question, the answer is D. Question number 26. Tell me one thing. Can anybody send me the picture of the view they are? Can you see the full screen, or my picture cuts your screen? My video. Can you see the full screen? Can you read the complete question? Okay, that's enough. I got it. In my view, it's like the question is cut. Okay. Zoila is a part-time employed earning 2,500 per annum. This is employment income. This is employment income. Okay. She also receive a property income from this is not employment income. 25,000 is not. This is property income, and this is dividend income. What is the maximum gross pension contribution Zoila can make in the tax year 21-22 and receive a tax relief full on her contribution? Very, very good question. You know, in my, yes, there are few guys, they are very smart. In my opinion, pension is not an easy topic. Pension has a lot of dodge. Now wait, you know, one thing which we called relevant earning. You know the concept of relevant earning. I'm just talking about personal pension. I'm not talking about occupational pension and or others, just PPC, personal pension. So relevant earning, you know the meaning of relevant earning means? Relevant earning means employment income plus trading income plus FHL, furnished holiday letting. So can anybody tell me how much is the relevant earning in this question? Only there is 2,500 employment income. There is no trading income. There is no FHL. There is no trading income. There is no FHL. So there is only relevant earnings of 2,500. Now, first of all, whenever your relevant earning is less than 3,600, this is a number. Whenever your relevant earning is less than 2,500, then you just cross it up, and this is the amount on which you can get the relief. Whenever your relevant earning is less than 3,600, then forget about relevant earning and just concentrate on this number 3,600. So yes, you can get a maximum, listen to me, you can get a maximum relief of 3600 if you contribute, if your gross contribution is equal to 3600. Now read the requirement, what the examiner is asking. Please read the requirement. What is the maximum gross pension contribution Zoila can pay in the tax year 21-22 and receive the tax relief on her contribution? They are not telling you to do it, they are just asking you what is the max benefit. The max benefit you can get 3600. The max benefit you can get is 3600, is 3600. Okay, now I'm telling, let me ask one question. What if in the exam, the question is done, question is completed, now it's my quiz time. What if in the question gross PPC is given 3000? What if in the exam gross PPC is given 3000? Now can you tell me with which amount you will stretch the band? With which amount you will stretch the band? Stretch the band. Good. 3000, yes. Although you could have got relief on 3600, but you by your wish, you lost some of the relief and you just contributed 3000. So 3600 and 3000 you have to take lower off. By this 3000 you need to extend the band. This is extra thing I'm telling you in this question. Okay, so keep things active in your mind. And you know, your mind is small. Very, very practical thing I'm telling you. If you add more stuff in your mind during these last days, so obviously studies will go out. And if you remove all the dirt, all irrelevant things, so automatically studies will get the space. Okay, I hope you understand my message, right? At least for this month, stay away from irrelevant things, things which gives you tension. Stay away just for this month, because you know it's all about memory. I'm telling you, it's all about memory. Okay, the next question please. 27. Okay, Harry earns 115,000 a year and has no other income. This is I think the most basic question. A&I related. Listen, you know, your income is 115, your net income is 115, and in order to calculate A&I, you need to less. He pays personal pension contribution of 5,600. This is 5,600 is he pays means net. Pays means the actual amount you are paying. It's net amount. Okay, so 5,600 you need to calculate gross PPC. 5,600 divided by 80 into 100. Come on, do it. 5,600 divided by 80 into 100. 5,600 divided by 80 into 100. How much is this? 5,600 divided by 80 into 100. Can anybody help? Can anybody? Yes, it's 7,000. Thank you. So your ANI will be, I think 108. Okay. Now, yes, this ANI is greater than income limit. This ANI is more than 1 lakh. Income limit. So 8,000 is the excess. Excess divided by 2 is 4,000. Now, your normal personal allowance is 12,570 less 4,000. So this will be how much? 8,570. Thank you. Yes. Your available personal allowance is 8,570. This is very easy work. I think I shouldn't have done this question with you. Okay, next. And this is going to be our last question of today's class. Harry is a sole trader and has deducted the following expenditure in the statement of profit and loss. Depreciation means accounting depreciation, okay? So this is not allowed, we all know. Accounting depreciation is not allowed, you need to add back. Legal fees in acquiring a new 10-year business premises. This is also not allowed. Legal fees for, listen, if you have read the notes or read the book, legal fees for the renewal of short lease, it's allowed. But when you take it first time, when you take a thing on first time for lease, it's not allowed. The legal fees is not allowed, okay? Entertainment staff, yes, it is allowed. But entertainment clients or entertainment customers, yet this is not allowed. So out of these four, these three things is not allowed. These three things are not allowed. Depreciation, obviously accounting depreciation is never allowed. Legal fees in acquiring the new 10-year lease not allowed. And the entertainment clients not allowed. So obviously it makes how much should be added back? You know, all now not allowed expenses we add back. So it's 7,300 is the answer. 7,300 is the answer. 7,300 is the answer. Okay. So now signing off with the class, please. One thing I would like to tell you that please be confident. The most important thing is your morale, your confidence. The moment you lose the confidence, the moment you think I cannot do, the moment you think it's not doable, then that means you are wiping out whole your hard work. Just think that before you, since last 18 years, many students cleared this paper. There are a lot of positions in one attempt. Even in this attempt, I showed you the marks of Nepal. That Nepali guy, who he scored 94 marks. He got position in Nepal. And one girl also from the Kuwait, she also got the position. So don't worry about it. Many students, see, they have got so much, they have got a lot of marks. When they can score 70s and 80s, why can't you score 50? Why can't you score? Just be confident, okay? And one more thing I would like to say, stay away from negative people. Stay away from, yes, you have to work hard, you have to make a study plan, you have to calculate your variance, that how much is the variance coming. You have to do everything. And the most important thing, you have to stay away from negative people, okay? Especially in the WhatsApp groups. In the WhatsApp group, there are some people, they transfer their own guilt on you. You know, there are some students, they transfer their own guilt on you. Normally, they are themselves, they are weak, or they didn't work hard, or they didn't start the course on time, or they are late, but they transfer their own tension on you. And you are a perfect guy, but now as you are receiving information wrong, so you will, this may distract you, okay? So best of luck for your exams, and please stay motivated, stay connected, and be very ethical in the WhatsApp group, okay? Take care. Allah Hafiz.